The market catalyst today is the US CPI. When the market got to know this highly anticipated data, it did not clear up the picture. Investors will have to digest a lot of the comments by Fed's policymakers tonight. The bunch of high-impact events promises a volatile session. Wall Street investors got a second wind on a Monday, and the benchmark indexes perked up in anticipation of the US CPI, despite pessimistic forecasts. The major stock indexes closed yesterday with the confident gains, having grown by more than 1%. The Dow Jones closed 1.11% up. The Nasdaq climbed by 1.48%. The S&P 500 rose by 1.15% intraday, to close at 4,137 points. The benchmark indexes opened cautiously higher on Tuesday, and the red-hot CPI triggered a burst in volatility, but the index sustained their gains. The S&P 500 is expected to trade in the intraday corridor between 4,070 and 4,240 points. Wall Street owes its rally on a Monday to waning pressure from Treasuries, the empty economic calendar and the low trading volume. US top companies also encouraged a recovery in the stock market. Meta shares jumped by almost 3% because the company was ready to announce a new round of layoffs following the first round in November. Stifel upgraded its estimates for Microsoft and said that the company would win the leadership of Alphabet through its integration with ChatGPT. Microsoft shares rose by more than 3%, Nvidia added 2.5%, Apple and Amazon grew by 1% each, Coca-Cola shares increased by 1.6% ahead of its quarterly report, which is due later today. Apart from Meta, these high-tech giants made the most contribution to the S&P 500's growth. 10 from 11 sectors in the S&P went up. The strongest performers were the high-tech sector and consumer goods sector. The energy sector slipped by 0.6%. The S&P has increased by 8% this year, and the index remains 14% lower than its record high closing price in January 2022. Today, investors are alert to the inflation data for January. The major stock indexes tumbled last week after Fed Chairman Jerome Powell warned that interest rates could be raised higher than expected. Analysts projected that the CPI would have grown by 0.5% on months, but the annual pace of consumer inflation would have declined. The annual CPI dipped to 6.4% in January from 6.5% in December, whereas the consensus had suggested a deeper drop to 6.2%. Still, the latest score is the lowest since October 2021. The CPI grew by 0.5% from a month ago, in line with the expectations. The core CPI, excluding volatile prices of food and energy, skidded by 5.6% on year, the lowest reading since December 2021. Nevertheless, the core CPI is an uptick higher than the consensus. Apart from the inflation report, investors riveted to comments by the Fed's policymakers in the light of the red-hot CPI and the strong non-farm payrolls. Perhaps they will revise the outlook for the Fed's further moves. John Williams, Lori Logan, Patrick Harker and Thomas Perkins are to speak later today. Fed funds futures indicate the ultimate size of interest rates at 5.2% in July, compared to the current target range of 4.5 and 4.75%. The funds rate is expected to be lowered to 4.90% by the year end, and the forecast could be revised radically tonight. On the geopolitical front, State Secretary Antony Blinken is considering a meeting with China's high-ranking diplomat at the Security Conference in Munich. If the meeting takes place, it will indicate easing tensions between the two top global economies. The US dollar weighted the CPI report in a gloomy mood. Its index shed 0.4% intraday to trade at 102.90, and the intraday carried for the index is seen between 102.10 and 103.50. The greenback sank before the inflation report. Its index has weakened by 11% since it's reached the 20-year peak in September. And the US dollar was also wound down by the news from Japan. The government introduced its nominee for the Bank of Japan's governor. This expected choice could put an end to the unpopular policy of yield control. The US dollar was on the defensive ahead of the inflation data. The fresh CPI baffled investors. The actual reading did not match the consensus, but revealed as an inflationary pressure. Obviously, due to the seasonally adjusted factors, inflation upped way less than expected. The outlook for the US dollar is uncertain. The think is that the Fed should assess whether recent CPIs corresponds to the long-awaited disinflation. Hence, investors alerted the remarks by Fed's officials tonight, and the US dollar's weakness somehow offset a fall in the oil prices for the Canadian dollar. The USD cut pace was trading at about 1.3320 before the opening bell, and the currency pair is likely to trade in the corridor between 1.3260 and 1.3379 today. Oil prices declined on Tuesday because the US government said it would release more crude from its strategic reserves. The US Energy Department reported that 26 million barrels from the strategic reserves would be sold. Meanwhile, such reserves contain the lowest levels of crude since 1983. Brent futures sank by 0.9% to trade at $85.78 per barrel, and WTI tumbled by 1.7%. Both benchmark rates are on track to the steepest intraday fall since February 3. Supply concerns calmed down after the Energy Information Administration said that it expects a record output in the 7 large shale basins in March. As for the crypto market, digital assets traded in the green. In the pre-market, Bitcoin rose by over 1% intraday to trade at $21,800. Ethereum, Solana, Ripple and Litecoin added from 0.2 to 2.4% today. The Binance story had its sequel. Paxos was not administrating BUSD in a safe and sound manner and had thus violated its obligation to conduct tailored periodic risk assessments and due diligence refreshes of Binance and Paxos issued BUSD customers to prevent bad actors from using the platform. Bitcoin could incur more losses today, and the token is expected to trade in the intraday corridor between $21,200 and $22,200. Keep close tabs on financial markets on InstaForex TV channel. Good luck in trading and see you online tomorrow.